Hey guys, what's going on? My name is James Daniel, here to make buying a home in San Pedro, California simple. And today we're going to go over the next video in the Home Buying 101 series, which is how to calculate a mortgage that you can afford. And I really think this is one of the most important videos in this series because when you get back a pre-approval from a lender, we'll use an example. Say you got a pre-approval and based off the information you gave him, you can afford a $2 million home, which may be out of your budget when you really look at the monthly payment of how much you can afford. So today we're going to go over the benefits of looking at the monthly payment and how to do so. So if you like this video, please hit the like button. If you want more videos like these to help you out on your home buying journey, please hit the subscribe button to get videos that I'm putting out about twice a week. Let's get into the content. Okay, guys, I think this is one of the most important videos in this series as you're starting out and as you're starting out on your home buying journey, because you really need to figure out how much mortgage you can afford before you start going out to look at properties, looking on Zillow and things like that. So I'm going to go over first a few key things that I think you need to think about when you're trying to find out how much a mortgage you can afford, and then from there we're going to go into more details of what you need to look for when trying to get to that overall number. So one of the first key things is just knowing how much you can afford per month. And that may be, sometimes when I sit down, when I do a buyer consultation, I go over, one of the questions I ask is, how much can you afford per month? And that may be the same as you're paying right now in rent. That may be less depending on how much down payment that you're wanting to put down, or you're maybe willing to pay a little bit more than you're currently paying just because you see this as an investment. So determining that monthly number, I think, is huge when you're trying to find the mortgage that you want to afford. The next thing would be just knowing that every situation might be different. So for instance, when you're, say there's a single family home at $500,000 and there's a condo at $500,000. If that condo has an HOA of say 100 to 1,000, which I hope it's not that high, maybe it is, it has some good amenities for you, but that's really going to mess with the monthly number. So really knowing what that monthly number is going to help you determine what situation and style of home might work for you, and maybe the amount of extra fees that may be coming with a condo might be there as well. Another thing to really look into is when it comes to the pre-approval process. When you give the lender your information, they're going to give you back an amount that you can afford, or they think you're approved for, based on the information you gave them. What you're approved for doesn't mean that you can actually afford that, or you really want to pay that number. So making sure that you know what that number is and then working backwards from there, I think, is key when you're in this process. I like to tell my clients in that buyer consultation, okay, the next steps are going to be, I'm going to introduce you to one of the lenders. We've established here that you can pay X per month. And in that email, I'm going to tell them to please give us an estimate based on how much you want to pay per month. And then you'll get that number back. So we know that, if we do see something you like and we go in and you see the number that you're going to have to pay per month, we've already done this work up front. So we're not having to scramble when we get, to the point where you see a home that you're like, we're not wasting your time or my time or anyone else's time in this fact. And I think last one thing that you will see when you are in this process, and probably after you have established that monthly amount, is that with the current interest rates, so say the interest rates right now are anywhere from 6 to 7%. As you go up every 10,000, that may be another $60 to $70. So say for instance, your monthly budget is $2,000. You see a home that you love, and it's about 10 to 20,000 more than what you've done the math backward. You can afford 500,000 comfortably monthly, but you have some room to wiggle with that. But this home is 500 and say 10,000. That's only going to be about $60 to $70 per month. So don't get too sad if you see something that's a little bit over with, but you probably can't afford that. Just keep that in the back of your mind when you're out looking at these homes, and definitely work with your agent to get that established. So Enough of some of the key things to think about. Let's get into just some of the details to come up that you should include when you're adding up that monthly payment. Okay, so when you are calculating how much you can afford per month, we're going to go over some of the things that you should keep into consideration when you're going over this. So the first thing would be list all the homeownership costs. So that could be your property taxes, your mortgage taxes, your homeowner's insurance, your maintenance, utilities that you have, condo fees, parking. Those are probably some of the basics that I would get down on paper as you're trying to go through and figure out how much you can afford per month. The second thing would be, list all other expenses. So this could be anything from, student loans, your car loans, memberships, daycare payments, whatever those payments are, add those up. And, I would almost get an Excel spreadsheet or get a piece of paper, just write these down, add up a total so you can kind of put them side by side to kind of see where you're at. The next would be your estimated yearly maintenance cost. So when you own a home, things will happen. I mean, there's a number of times that I've had to call out plumbers. I've had to, dishwasher, it has gone down. The dog has done something, whatever that might be that you want to account for. So usually a good number is about 1% of your home's purchase price per year, to make sure that you have that saved on a monthly basis. So whatever that overall number is, obviously divide that by 12 and add that to a monthly basis. This may be something that you don't want to include right now. You may just, hey, I got a credit card, I want to keep that later. Cool, do your own, but definitely something that you can potentially consider in that monthly payment when you're going through this list. The next thing would be to just think about and make sure you work with your CPA on this one, would be just any tax advantage that you can get and how that affects you on a monthly basis. I'm not going to go into that too much because I'm not a CPA, I am a real estate agent, but definitely something to consider when you're in this process. And then, any other expenses that you can think of outside of what I've mentioned. That could be you're moving into a new home. Maybe it's bigger than what your apartment is currently. So you're going to have to get furniture, desk, tables, dishes, whatever those expenses are, making sure you know what they are and you're budgeting, for those while you go through. So the two main ones I think would be, listing the other expenses that you have, listing the potential home expenses when you're getting, make sure you're getting that from your lender and working with your agent on that, and really trying to see what that monthly amount is and if there's anything that you can adjust or budget on to really get you to your goal of owning a home. So I hope that helps you guys just figure out what different pieces that you need to consider when trying to figure out the monthly mortgage that you can afford. But there are some key things that I want you to think about. So one thing is, there are different things that may be happening in your life. So say, for instance, you're making more money in the future, or you're getting some money from somewhere. So you maybe feel more comfortable going with a larger mortgage payment that you're approved for when you're looking to buy a home. But there could be other things. There could be, something that where you have lost your job, or maybe, making less money, depending on the situation. Maybe you got a new car, so your expenses are going up. You're about to have kids, or you're planning on having kids, your expenses are going up. So definitely some things that you want to take into consideration when you're thinking about that monthly payment number. It was definitely something I thought about when I first got my first home. I was very, kind of just, obviously you're a new home buyer. You're like, wow, I have this mortgage that I have to pay. So I wanted a home where I could rent out a room or do Airbnb in a room. I ended up doing Airbnb in one of the rooms, and it was generating money on a monthly basis. So that's the solution I felt to help me feel more comfortable while I was a new homeowner, to make some money. So if something did happen, I knew I could generate some income. So depending on where you're at or what you're thinking, that's something up to you that you'll definitely have to decide. So I hope this helps you guys, figure out your monthly payment, get some things to think about. If you have any questions, please feel free to reach out. My information is below. Take care and look forward for the next video, which will go over how to find money for a down payment. Take care, you guys. Ciao.